It's 48 hours to the end of the month of June, but global financial markets are entering a pivotal week driven by an early jobs report, which is critical to inflation, as well as a heavy dose of central bank commentary. But first, let's start global news with expectations. First, we're starting with the European Central Bank, which is kicking off its annual forum on central banking in Sinatra, Portugal. Now, the discussions will focus largely on inflation, interest rate, AI's impact on productivity, as well as financial stability. Now, the ECB's president, Christine Lagarde, will deliver the opening dinner address tonight, while global central bankers are warning that the rapid expansion of artificial intelligence investment could create a new financial risk. Now, the concern is that heavy borrowing to fund AI infrastructure and increasingly similar AI-driven investment strategies could amplify market volatility during the periods of stress. Now, global financial markets will closely monitor comments and heavy rhetorical guidance from top central bank governors, including the Fed Chair Kevin Walsh and Bank of England Governor Andrew Bailey. Now, for Tuesday, the expectation that we'll be having is that China's official June MBS manufacturing PMI report is expected. So there'll be two PMIs reports. So now, first, the PMI, the manufacturing PMI is expected at 50.1, and the non-manufacturing PMI is expected at 49.9, and that is offering critical insight into economic expansion or stagnation. Now, China's official Purchasing Managers Index serves as critical timely barometers for the broader economy. Now, for Wednesday, July the 1st, now preliminary June inflation data for the Eurozone area is expected to show that the Eurozone's headline CPI is expected to cool from 3% down from 3.2% in May. And this will be largely thanks to the sharp drop in energy and crude oil prices. At the same time, core CPI is expected to stay sticky at 2.6%. Meanwhile, Eurozone's May unemployment figures, which would be released on July the 2nd, is expected to hold at 6.3%, while Germany, which is the Eurozone's biggest economy, is expected to tick up to 6.4%. Now, for Thursday, July the 2nd, the highly anticipated June non-farm payrolls, NFP, that's also known as the jobs report, will drop a day early on Thursday, with U.S. markets, which will be closed on Friday in observance of the country's July 4th Independence Day. Now, the NFP consensus indicates that the market expects the U.S. economy to add 114,000 jobs for the month of June, and that's down from the prior month, with unemployment rate holding steady at 4.3%. Now, strong payrolls numbers could strengthen expectations of tighter monetary policy, influencing global bonds and equity markets, while investors are waiting that the clues on the next move would influence the U.S. Fed's next move. Now, finally, for Friday, the expectation that we'll be having is that the U.S. equity and fixed income markets will be completely closed in observance of the 250th Independence Day of the United States, which that was from the year 1776 to 2026. Now, because the U.S. Independence Day holiday, which is on July the 4th, falls on Saturday this year, both the New York Stock Exchange, NYSE, and the NASDAQ will observe the federal holiday on Friday. Now, while European and Asian markets remain open on Friday, global trading volumes are expected to be incredibly thin and prone to sharp, erratic movements as international desks attempt to digest Thursday's U.S. jobs data without any liquidity or participation from Wall Street. Now, so let's head down to global news. Now, following high-stakes, chaotic weekend of tit-for-tat strikes, a senior U.S. official has confirmed that the United States and Iran have agreed to a temporary halt in their hostilities. Now, the stand-down is designed to save a fragile 14-point interim peace deal and clear the way for urgent face-to-face negotiations scheduled for tomorrow, Tuesday, June the 30th, in Doha, Qatar. Now, the interim ceasefire, which was brokered on June the 17th, began unraveling late last week due to the conflicting interpretation of the Memorandum of Understanding, MOU. Now, specifically, the friction centers on the control of the Strait of Hormuz and access to unfrozen financial assets. Now, let's go over to AI-related news now. As the first half of 2026 draws to a close, a massive rotation is playing out across global technology boards. Now, this comes as South Korea announces an ambitious multi-year investment program aimed at strengthening its leadership in artificial intelligence and semiconductor manufacturing. Now, the country's President Lee Jae-myung said today that the plan is aimed at rejuvenating the economies of areas outside the capital, Seoul. He explained that the initiative is expected to involve hundreds of billions of dollars in public and private investment. Now let's move over to China, where we see that China and India and Hong Kong have emerged as the only major stock markets worldwide where top companies account for a smaller share of market capitalization than a year ago. And that's also underscoring their lag in the global AI race, which to talk about AI. Now, according to Bloomberg compiled data, in both China and India, the 10 largest companies in each nation now account for about 19% of total market capitalization, and that's down respectively from 26% and 22% a year ago. Now, the data shows that these benchmarks have largely underperformed, especially compared to Taiwan and South Korea, where a few AI stars have lifted the entire benchmarks. Let's go over to metals market, where copper fell as much as 0.7% to $13,267.50 per ton on the London Metal Exchange and traded at 13,330 cents a ton at that's about 10:30 a.m. in Shanghai today, as the Federal Reserve's hawkish stance and rising U.S. dollar continue to weigh on sentiment towards the industrial metals. Now, the Federal Bank of Richmond President Tom Barkin warned on Sunday that inflation was too high, although he did not see tentative signs that price pressures may moderate soon. Now, copper is on track for a monthly loss of more than 2% in June after posting record close before the month. Now, traders are tracking the outlook for U.S. monetary policy, while U.S. trade policy is also in focus amid expectation that the Trump administration may opt to impose a levy on inflows of refined metal. And that's global news for Monday and global expectation. I'll see you again on Business Incorporated at 1:30.